I'm Charlotte McLeod with investnews.com, and here today with me is Gwen Preston of Resource Maven. Thank you so much for joining me. Great to see you.
Oh, good to see you too. Thanks for having me.
Of course, and we're here at the New Orleans Investment Conference. First interview of the day, very exciting. We're going to talk about commodities, but before we get into talking about specific metals, I want to ask you about sentiment in the resource sector right now. So tell me how you're seeing it.
So I actually just gave my talk in there, and the structure for my talk was comparing the sentiment of the majority, which is despondent, the majority of junior mining investors, to the minority who are incredibly excited. And I think the difference is that the majority who are, I'm talking about retail investors, but also the companies that need to raise money. Those are the two groups for whom sentiment matters, right? The majority usually need to see something happen in the near term. They need to raise money near term. They want to see some gains in their portfolio in the somewhat near term. And there isn't a lot of reason to believe, gold perhaps accepted, but for the rest of metals, that anything is going to change in the near term. We've been muddling along for a while. Metal prices have been fine, but no investors are interested in mining stocks. There's a whole host of reasons for that. The main one is simply that being invested in indexes, which is the same as saying being invested in the Magnificent Seven or whatever you want to call big tech, has worked just fine. When that changes or is changing, that will spark investors to actually have to look for value. And that's a setup that we haven't seen in a long time, is investors having to look for value. So that's why we haven't had investors interested. I don't think that this is going to change tomorrow. That's why that majority remains despondent. The minority who are super excited about buying mining stocks right now are those who have deep pockets and therefore can be patient. And since they don't care whether this happens tomorrow or in Q1 of next year or the year after, they can just sit and wait. They see the big picture for what it is, which is that there's a shortage of metals in the future and that there's lots of reasons for gold to perform, and they're happy to accumulate positions. So sentiment's terrible, but some people are very excited, and there's sort of reasons that make sense for both.
Right. I was going to ask you exactly, okay, so when does that majority become interested again? And you've answered that. Sounds like it's going to be the way it is for some time, but that means that people have opportunities. There's time right now for people still to get positioned, is what I'm hearing.
For sure. And there's also ways that you can find interest in the near term. So if you're someone who focuses on metals investing, which is what I do, something like investing in discoveries will perform in a market no matter the market. So if you get the way I look for excitement in my portfolio in the near term is discovery stocks. And then and uranium, which we perhaps can talk about as well. But uranium is marching to its own tune, and it's a very happy tune. And then I also have a bunch of the portfolio positioned for when the big picture changes, for when investor interest comes into this space. And then I have a bunch of positions that I think will perform first and best when that happens.
Okay, and one more note on the juniors, because something that I am hearing frequently right now is even the companies that have money right now, they're making progress at their projects, they're releasing results. When they release those results, it becomes a selling event, and people who are sick of it, they just want to get out. That's when they do it. So any comments on that situation?
I mean, it's very real. I saw a news article just this morning, too, about, Echelon Capital Partners. They were having to liquidate a bunch more positions because one of their client funds ended up being broken. Very short description of a complicated story. There's all kinds of reasons that people get strung out from this stuff. And I get it. I've had to go through the mental exercise a couple times in the last 6 months of why am I in this game, and what's my game plan to stay here if I still believe it. Because if you don't, it's very easy. This has been a long, grinding market, and it's very frustrating that the gold price, the copper price, like a lot of the metals are doing just fine, but the stocks are just not. And it's very frustrating. So I get it. There's lots of people out there who will also say, when everybody sells, like that's the bottom marker for sentiment. And I do believe that. There is something to that. The caveat is that we're in a bit of uncharted waters in terms of what's been going on in the big markets, what's been going on with, monetary policy and fiscal, we're in a bit of a different game. And I do think that game is changing, and it's changing in gold's favor right now for sure. Base metals are going to take a little longer to go. I don't think junior mining sentiment in itself matters that much, But I think the big picture moves are setting up for gold to do well sometime soon.
And so among the juniors that you've invested in, what do you want to see them doing right now? Do you want to see them release results and possibly have that selling event? And do you maybe have any examples of companies that are navigating this interesting time well?
That's a really good question. There's a few stocks out there that are doing very well. Mayfair Gold is an example of a stock that just its share price chart is a thing of beauty. And it's not 100% clear to me why the investing community has decided that project and that team is going, like, that they love that one. Often you can sort of see a segmentation. There's, the tier one projects, teams, opportunities, and then there's the rest. Right now, it's not so clear. When things are unclear, I try and find a rule that will work. And for me, that rule is discoveries. Now, discoveries are the hardest stocks to pick and win because we don't know what the rocks are going to return. But if you can have reason to believe that a stock has a fairly good chance of generating a discovery, maybe they're testing more than one target, the targets are particularly good, whatever your rationale might be, discoveries can absolutely work in any market. So I have at least half a dozen stocks in the portfolio where I'm like waiting on results from testing targets that I really like. And those are the ones where I'm like, okay, this could happen sometime soon. As for what juniors should do, you just got to keep working because it will change, especially in the gold space. It will change. There are investors out there. It's just hard.
Yeah, very tough, very tough. There's not that kind of one size fits all answer there. Okay. So I'm going to spend just a little bit of time on gold and then we'll move on to uranium. Of course, we've got to touch on gold for at least a moment. So I think just a quick take on the gold price right now. Does the current level make sense? You mentioned things are going to change in its favor, but it sounds like maybe not in the immediate future.
Gold is the one that's hardest to understand. I shouldn't say that. Metals are hard to understand, are hard to predict in the near term in general. Gold, seasonally, November and December are not great for gold. Like that's the general pattern. That said, the reason that gold is moving right now is because of rising risk in general. You can point to specific geopolitical risk like the war in Gaza, but more generally, we're seeing T-bill treasury yields are rising. And treasury yields are rising because there are not enough buyers for U.S. debt. And that is a huge problem, like a huge problem. It has been developing. There's been, call it arm-wavy talk about the end of the U.S. dollar for a long time. That is sort of de-dollarization is happening in real time now. I'm not saying the U.S. dollar is going anywhere tomorrow, but de-dollarization is actually happening. That's why yields are rising. That's why gold is rising alongside yields. There's a lot of really interesting things that are happening that are changing the pressures on gold in a positive way. Central bank buying is through the roof. Undisclosed central bank buying is through the roof. That's all the BRICS and BRICS plus nations gradually pulling gold into their central banks so that as this de-dollarization, deglobalization system or process happens, they have their fallback reserve. So there's a lot of bullish forces on gold. I don't know when it's going to move. If I had to guess, I think it might move in January, February, because that seasonally plus the forces might come together. But it's equally likely that some sort of stock market crash or recession could be the catalyst as well for gold. The warning signs of that are also rising. So I'm not sure, but gold is looking the best out of all of the metals other than uranium.
Okay. And that's a good segue into uranium. So when we talked in, I think, mid-2022, you gave us a primer on what was going on in the uranium market. And I think a lot of the factors that you mentioned are starting to play out now. So, of course, we want to come back and look at that. So we've had the price rise in recent months. And I think what people are wondering right now is what's coming next? Do we get a slow and steady rise? Do we get that price spike scenario? Any thoughts there?
Yes, lots of thoughts. So the uranium price is up almost 50% since the middle of summer. So it's gone from sort of $50 to $74 a pound. That has happened on very small volume transactions in the spot market. A lot of those transactions have been EU buyers, European utilities that have needed for their own reasons to procure some additional uranium. What's been really interesting in that is that US utilities have been largely absent from the market. They were waiting for the answers to some questions about U.S. policy on where they should source uranium, the realities of how those suggested policies will play out. They were sort of waiting for some clarity on that. They can't wait anymore. They're going to need to go in and buy some uranium. So what that says is that there's some more buyers coming into a market that doesn't have pounds to sell. So that's a pretty simple statement. What that will do to the uranium price, I'm not totally sure. I mean, how extensively it will push it higher, I'm not sure. It will push it higher for sure. What I really like about this move is that this move has happened because users of uranium need to buy on the market and it's not there. The move that we saw in 2021, in late 2021, was because financial entities that were stockpiling uranium were taking excess pounds out of the market. That's great, it worked, but it isn't the same as users taking it and then using it and making it disappear. It's a more sustainable, robust, real transaction. And that's where we are. I mean, uranium is the case study for where copper and nickel and a bunch of these other metals are going. Uranium is at the point where there actually isn't supply available. We keep talking about that for those other metals. We haven't got to that point yet for those other metals. But for uranium, there isn't supply. Like the biggest producers in the world, Kazatomprom and Cameco, you can't buy uranium from them for delivery earlier than about 2029 at this point. Sure, timeframes are longer in the uranium world. You're not usually trying to get it for tomorrow anyways, but it's not there. It just doesn't exist. And so this is the case study, and it's happening in the uranium market. More buyers are about to come in. The price will go higher. What's fair value? I don't know. Does the uranium price always overshoot in a bear market? Oh yeah, it does.
Okay, that's really interesting. So this is possibly the blueprint that we then see repeated across these other commodities. All right, so let's go into supply and demand a little bit more. We have limited time. So I want to ask you, there's so many different factors going on, and you've talked a little bit about, the U.S. buyers. That's an important part. What are the other key supply demand factors that you're keeping an eye on right now?
So the key is, there's not a lot of change happening in the supply-demand setup for uranium. What really matters is that the users of uranium, excluding the stockpilers, the financial ones who can sort of buy and sell as they want, the ones who actually use uranium, the nuclear utilities, they buy if they need to buy, and they actually don't care about the price. I'm sure they would prefer, or their accountants would prefer, if the price were a bit lower. But in general, they don't care. They need pounds. They can't let reactors run dry. So they will buy regardless of the price. This is a really important comment. The fact that U.S. buyers are coming into the market now after a 50% price run only underlines this, which is something that uranium investors always say, oh, utilities are, don't care about the price. It's true. We're seeing it happen right now. They can't care about the price because they need uranium. So what you're getting is the demand is what it is. There's certainly uncovered future needs that are higher than usual. There has been for many years lots of excess supply in the spot market. Utilities have been able to just pick up supply in the stock market to cover those future demands. Now we're getting more into a contracting situation, but contracting is not available. Uranium producers are going to require higher prices if they are going to sign contracts for the limited pounds they have available. Everything is really set up. It's a seller's market right now. And yeah, it's just very tight.
Okay. And so if we relate all this back to what investors can be doing right now, I think it seems like a lot of people have chosen to go with producers in uranium. So I want to ask you how you're approaching it. Is there room for developers, for exploration companies? Yeah.
Absolutely. Yeah, for sure. So uranium is a very small market. I mean, there's probably 70, that may even be, that number may be a bit high. There's probably 50 really, real uranium equities that you can buy out there. It's a small world. Compare that to oil and gas, tens of thousands, right? It's a very small market. So that means that when interest comes in, it's like trying to send, Victoria Falls through a drinking straw, right? The pressure is intense. And that pressure will lift everything, for sure. Now, the most liquid stocks out there are the producers. And so you can either buy the chemicals or the baskets of such producers, like URNM, the Sprott basket. They also have some nuclear fuel processors and whatnot, which is fine. Those would all move the same way in a uranium market. Absolutely. You can certainly move down the value chain. There aren't a lot of uranium developers to buy. There's probably only 6 to 8 of them out there. So feel free to buy them. They will do very well. Quite a few of them who are developers are not that small. Like NextGen is already a massive company, right? So there's how much difference is there really between buying the developer versus the producer? If you want to go into the risky end, which is the explorers, you absolutely have the opportunity, the possibility of multiples of the gains that you might get in the producer side. But of course, there's the risk. Like the explorer will move with the market until or unless they either win at a discovery or fail, right? So if they win, then yes, you might get huge returns, like ridiculous returns. But there's a big if in that. So any of these options are on the table. The main point is that the market is really small, and when interest turns in, the pressure gets really high.
All right, and maybe something for people to understand on the explorer side, companies that are exploring right now most likely are not going to go into production during this cycle.
Absolutely not. And that's actually a good point. If you're formulating an investment thesis around this cycle has to do with there not being enough pounds to supply to utilities now. The entities that can answer that are those that are preparing to go into production. And so in situ recovery producers in the United States are probably the best category of that. So the energy fuels, the energy fuels, the UECs, the uranium energies, those kinds of companies have been working for the last 5 or 6 years to permit think of it as leaching the uranium out of the rocks while the rocks are still in the ground and then pumping it up. They've been working to permit those operations and so that they can put them into production in this market, which is what they've been predicting for a bunch of years. So absolutely, there are stocks that you can buy that are particularly for that. And I think they probably will perform better than average in this market because they are serving the need. But you're right that explorers are the exciting what might happen down the road for uranium, but that's a discovery thing, which is different.
All right, and one final point on uranium. So it's known for being an opaque market, although I think that investors who look at it usually tend to go pretty deep into it. But nevertheless, I'm gonna ask, what's a misconception that you see around the sector that you would want people to be aware of as if they're gonna come in?
I mean, I think there's been for a long time the social questions about the safety of nuclear energy. And my answer to that is that it's the safest energy supply out there. If you compare, deaths per kilowatt produced from coal and uranium, coal is hundreds of times worse. If you think of coal mining, if you think of smog, all of these things. So it's a very safe energy. And the other question that's often raised is this radioactive waste question. It's not, barrels of oozing green goo, not in the slightest. It is cooled for years. It is locked down in cement. It is buried underneath things. It is quite modest in size. So those hindrances have long been important in the nuclear space because anytime nuclear energy sort of started to get momentum, these concerns would sort of get in the way. I feel like that's actually easing lately because the reality of needing nuclear energy is just becoming more stark. So I feel like the misconceptions on that front are easing off. I'm sure there's others that I haven't thought of yet, though.
No, that's great. And okay, as we're wrapping it up, what are some do's and don'ts that you would leave investors with as we head toward the end of 2023 and probably into 2024 as well?
Good question. So I think establish exposure to gold. If you don't have exposure to gold, I would encourage you to consider establishing exposure to gold. If you're new to gold, then just buy big companies, right? It's actually insane the companies that you can buy, the net asset values of their operations versus what they're trading at. The valuations are very discounted because people haven't been interested in gold. I do think that will change in the next 6 months. I do think that will change. So I would encourage exposure to gold. I would say don't right now get overly excited about the base metal opportunity. This will happen. The supply deficits for copper, for nickel, these things are very real, but they are not going to become investment opportunities until the investing community is confident that we're moving towards a growth path. Right now, instead, the questions are what are the risks? Are we heading to a recession? Right? So we're not going to see that as an investment opportunity until we're on a growth path. So be ready. Certainly figure out which stocks you like, but I wouldn't get overly excited about the base metal opportunity in the near term. So consider your gold, get exposed to gold, don't get excited about base metals, and know that there's a lot more room in this uranium market. Yes, the price has already gone up 50% since midsummer. Yes, there's a lot more room left in this uranium market.
Okay, I think that gives people a lot of ideas for what to do next and what's coming. So thank you so much for sitting down to talk about gold, uranium, and whatever else that we just covered. Thank you.
Thank you so much for having me.
Of course, and once again, I'm Charlotte McLeod with investingnews.com, and this is Gwen Preston with Resource Maven. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.